Well, good afternoon, everybody, and welcome to the St. Patrick's Day Eve edition of Bull Sessions. My name is Mark Robertson. I am joined here by my dear, somebody referred to you this morning as a sidekick, Ken. I don't know who, if it's just dual sidekicks, but I'll take it. Good afternoon. How are you, sir?
I don't have to wear a Robin costume, do I, Mark?
We can wrestle over the next meal together as to who wears what costume.
Okay, all right.
And we have a really special program for you here today. We've got some extra special guests, and I would just, as I introduce these people, just say these are among the greatest people I've ever hung out with and shared investing ideas. Leading the group off on the left, she's riding the bull on the far left, is Kim Butcher from Florida. Good afternoon, Kim.
Hi, guys. How's everybody doing?
Doing good. I haven't started on the green beer yet, so we're pretty good, in pretty good shape. Speaking of green beer, the guy next in line in the middle of the board up there is Pat Donnelly of Pittsburgh, and Pat has hung out with us for a number of years, and he's always just a joy to, again, share ideas with. Good afternoon, Pat.
Good afternoon, everybody, and thanks for inviting me.
You're most welcome. Glad you could carve out some time to be here. And last but not least, on the far right is our world travel expert. Now, Spielman doesn't sound very Irish, but we have to give you an honorary Irish tag, Matt, having spent the last, better part of 2 years in Ireland itself?
2 years there, yeah. The wife's family is Irish, so
okay, so
I got it in too.
You do qualify. Well, good afternoon. Thanks for joining us, Matt.
Good afternoon.
All right, so we're gonna have a little bit of an Irish tint to the stuff we do, but not as much as we might have. The most Irish amongst us, Hugh McManus, isn't able to join us. He's probably, again, out there on the battlefront helping to make vaccines, and we certainly don't want to get in the way of that. So that's what he does in his day job. So let's go ahead and get underway. I'll get the legal paperwork out of the way here. No investment recommendation is intended. This is an educational demonstration. Welcome if you're joining us for the first time, or if you've been here many times, welcome back. You know that we basically are talking about the methods, techniques, philosophies, and processes of the modern investment club movement as taught over the last 8 decades by the National Association of Investors, also known as Better Investing, or as interpreted by us at Manifest Investing. All opinions are our own. We might talk about companies that we actually hold in a real money portfolio. We try to disclose that, try to remember to do that. We do host a monthly webcast that's now going on 11 years called The Roundtable. It's always on the last Tuesday of the month, or almost always on the last Tuesday of the month at 8:30 Eastern Time. By the way, many of you all served on the Roundtable. We're up to a 19% rate of return on that 11-year track record. 19, we finally made it up to that threshold. If you'd like to be added to a reminder list for that webcast event, send an email to ncavula1@comcast.net. If you have suggestions for topics or want copies of slides or just simply have a question, send an email to markr@manifestinvesting.com and I will receive that. All right, let's go ahead and just take a look at what is in the bullpen. We're going to cover Irish investing stuff a little bit here today. We've invited Matt as our aviation expert to share some thoughts on the AirCap GE Capital Aviation merger. So we'll spend some time talking about that. We are going to share some Irish Spring screening results, and we'll cover all those other topics all the way down to perhaps biting into Bitcoin sometime fairly soon. We have talked in the last couple sessions about this book, Layered Money by Nick, that's probably Basha, and that may form the basis of a future bull session discussion on cryptocurrencies. Other than that, just fair warning, a member of our family is actually entering the final stages of his time here on Earth, and it's my father-in-law. and he was a founding member of the Hiawatha Investment Club back in the 1960s. I didn't even know he had done that. And then one day after I became involved with Better Investing with the Chicago chapter as a volunteer, he got out all kinds of stuff from the 1960s and showed it to me. So we're probably going to spend some time with the Hiawatha Investment Club here at a future bull session. So you are fairly warned. All right, just one quick graph just to make a point, couple of points. Things are pretty hot. The Wilshire 5000, as shown by that green area at the top of the chart, has now reached unprecedented levels. That's good. I mean, unprecedented levels are a normal thing when it comes to investing, but it's been a pretty steep ascent from the year ago. Ken just confessed during the green room that he spent all morning watching CNBC looking back a year ago. Is that correct, Ken?
I listened to about an hour of CNBC this morning. No, I didn't sit there with my mouth open watching it for all that time.
Well, I'm glad to hear that you're not completely impaired, but we do recommend, and I took a look at this video. The gentleman there on the lower left, his name is Graham Stephan. He's kind of fun. He has a different style. It's not going to be everybody's style that's on the call, but he asks the question in a recent video that's available on YouTube, is the stock market broken? I was kind of fascinated by his treatment of the lost decade, something else that Ken fixates on, the lost decade of a few years ago. But he goes through and gives a very nice treatment of that. So I would recommend that. Are we in a place where the stock market is irreparably broken? I hope not. I don't know. But we are at a point where the average or median return forecast is not terribly robust right now. And that's a little bit of sugarcoating. What are your thoughts on this?
Well, Mark, first of all, I do like to focus on that lost decade that was back at the turn of the century there. And I like to focus on it from the point of view that we found lots of ways to beat that flat performance. And better investing methods served us quite well during the lost decade. Investing in small and medium and large companies really helped us stay ahead of that gain of close to zero over a 10-year period, and put us in a position where when we hit 2008 and 9 and the financial crisis hit and everything went down, we went down just like everything else, but we were considerably ahead of where the bigger indexes were, and we were able to stay considerably ahead. The bounce back in our nice mixture of classes of companies was faster, and I guess I'm not hoping for another lost decade, but I think I have the key. I think I know how to live through another one if it should have started to occur.
Yeah, I agree completely. I mean, it's the sort of thing that's been kind of frustrating over the last year. I have friends and neighbors and people that I try to help with an investing perspective, and they've been very challenged by this dramatic run-up. And a few of them jumped out, I want to say 8 months ago, and they keep waiting for an opportunity to get back in. And that's a very, I'll just say it's just a very challenging mode to be in. We'll probably spend a session talking about this subject. It's one that we love to talk about. Just that you can take some of the edge off of this by investing in companies, not markets, and pick the companies carefully. One of the things I do like to share, maybe this is something we'll dig into, is take a look at the performance of the better investing stocks to study during the 1970s. Another period that was really ugly when you look at it from beginning to end, but some of the best stock selections made between 1972 and 1982, some of the best selections made in the history of better investing were during that particularly challenging time for investors. So it's just something to always keep in mind. Check out Graham Stephan. He does a unique coverage of the pundits and the talking heads, and he lays a couple of them out politely and with respect. So
Mark, I think I also would like to tack a little bit onto that topic by talking about how even when you have some of your great stocks that have run to all kinds of high levels, you can play the game of trimming a little bit and putting some of your capital back to work in companies that haven't quite discovered the upward drift of the market at this point yet. I think that some of the clubs I'm in have been around for long enough. They've begun to learn to play that game, and it's worked out quite well for them, very well for them, in fact. Not just selling a complete holding when it gets down to a par of zero, but trimming it down, keeping a hold of some of it, because we know some of these momentum stocks keep running even though they shouldn't be, but then taking some of that capital and reallocating it to stocks with a lot more potential and real potential, not necessarily PE expansion potential.
no, that's something we'd still. It's on the agenda. It's in the bullpen to cover.
Great.
Places to park, and maybe we could expand that to hunting techniques for the companies that meet the description you just gave. So let's go ahead and do that. All right. I've promised you that we're not going to cover the groundhog every week at bull sessions, but as long as I'm on the leaderboard, chances are we will. Hey, they're at number 25. I'm proud. I am $15 behind Nick DiVirgilio. So we're in a dead heat and having some good, clean fun. This thing was really in terrible shape a week ago, and we've had pretty good recovery. Many of the people involved have had a pretty good week. We are back to 40% of Groundhog Nation beating the market. Kathy Wood is still 141st. That's just a poke. I have no problem with Kathy Wood. She's a great source of ideas and has a very, very formidable performance down at ARK Investing. But I did want to just take a moment and point out a couple of things. We have featured other portfolios here, but I wanted to point out this week, especially since we've got Pat with us. Pat being from Pittsburgh, I took the members of the Pittsburgh chapter that are near the top of this leaderboard and put them in Steeler or Penguin colors. So you can see Rob Martin, Terry Greisinger, and Terry Lyon. I know that Terry is a member of the Sirius Investment Club. That's a former Groundhog champion. And again, it's just an opportunity to nod towards the heavens and Nick Strategos and Herb Barnett, who again shared so much investing wisdom with us, and they passed away last year. But the Sirius Investment Club lives on, I believe. Pat, I don't know if you're involved with them directly, but
no, I'm not. But yes, you are correct. They do continue to go on. Interestingly, and maybe common, quite a number of our directors are members of the Sirius Investment Club. Nobody can smile while you're there. That's one of the ground rules. Serious all the time.
Does that mean no adult beverages either? Or?
Yeah, exactly. It's very everybody's. It's a stand-up meeting. It's tough.
Oh, goodness.
But yeah, and then Terry Lyon and is one of our charter members of the Pittsburgh chapter, and Rob Martin is also part of all three of them actually are part of our two model clubs.
Excellent. Well, I thought I'd give you the chance to talk model clubs and just in general about educational opportunities in your zone, Pat. Go ahead.
Okay. Well, thanks. We are just coming off of trying to keep up with everybody else. We just wrapped up a three-part session on portfolio management where we dove into the portfolio tools of the online guide and wrapped up with a pretty robust discussion on PERT. With a new handout that was developed by one of our new directors. And so upcoming, I think our next event is going to be a Let's Talk Stocks session. Stole that from Ken there. But yeah, we try to rotate it. So we have a Let's Talk Stock, then we have a Stock to Study, and then we have some type of formal education as well on the tools.
Okay.
So appreciate that. We do it online. We are on Meetup. We appreciate anybody that attends and welcomes everybody. So thank you.
You bet. One other thing I wanted to highlight is we do have a Rhino invading the top 5. It's David Einhorn from Greenlight. That's basically a hedge fund. But David has had, and I'm really sugarcoating, several rough years in the Groundhog Challenge. So it's kind of good to see him rebound a little bit. He's kind of a fun guy. And here's a look at a book that he wrote a few years ago. And he is a very interesting guy, and has a good, very long-term record. He's had some rough years in real money and in some of the hypothetical investing over the last few years, but we all know that happens to us some of the time. One of the things that I discovered is I drilled in a little bit deeper. And Ken, I don't know if you're aware of this one or not. This Portfolios with Purpose. It's actually an educational simulation, kind of like a Groundhog Challenge. And I want to take a closer look at it. It's a contest that is available to the general public, but they do it with quite a bent on charity. So we might actually do something with this. I don't know. It's not inconceivable that we wouldn't run the Groundhog Challenge through this a year from now if it looks to be worthy of taking a closer look. Had you heard of this at all, Ken?
This isn't exactly something that is aimed at high school kids, which was the audience that I was dealing with for such a long time, Mark. I have heard of it. I have looked at it, but not enough to even be that interested in it, considering I'm already in 3 or 4 contests. So I would like to learn more about it if you're going to dig into it, though.
Yeah, I will dig into it just to see if there is any merit to it, and maybe we'll run a hypothetical shorter-term groundhog just for the sake of demonstration and exploration. But interesting guy, quite a poker player, by the way. Also, he's actually made it to the finals of the national poker tournaments. All right, a little bit of shameless promotion. Ken already mentioned it during the green room. From May 12th to the 14th, we're going to do another COVID cancellation conference. And Ken, do I have those dates right? Is that all good?
I'm checking right now, Mark. It's going to be May 12th, 13th, and 14th. Is that what you have down? Yes, it is. Right. And more information will be coming out the first week in April.
Okay. And what you see here is last year's stock panel scoreboard. And again, Pat, we've been bragging about you for a few weeks. I don't know if your ears have been burning or not, but would you like to spend a moment talking about the inspiration behind Stone Co?
Sure. That was a move that is a Latin American, actually Brazil, I believe, financial technology company. Started to move into the touchless paying and being able to do all of your banking, etc., financial transactions from your platforms of choice, phones, computers, etc. Got really lucky at the time. Warren Buffett plowed a bunch of money into it right before I started talking about it, and they've also been building out their infrastructure, so they are in touch with people on a face-to-face, case-to-case basis. And for the record, this is definitely a sell at this point. This is not a continue to hold.
Well, you're only up 3.5 times your investment, so.
I know it's one of the weaker performers, but.
So, Pat, there's no truth to the rumor that Mr. Buffett calls you for inspiration?
No, I think he's got my phone bugged though.
Okay. And here's Ken's moment in the sun. We were complaining in the
I
green
want to know
room.
how this chart is sorted, Mark. How did you sort this list here?
Well, I generally try to sort to get my name up the list as much as I possibly can, but no, this just is unsorted at this point.
So it's sorted to put Kavula's name at the bottom of the list, both of them, right?
Oh yeah, yeah. But again, Ken, 30% returns is not anything to.
No, I'll take it any day. If I can move my portfolio ahead 30+% any given day, I will take it and put it in the bank. I picked General Dynamics and AbbVie. I thought they were good, solid picks, albeit a little bit boring, a little bit vanilla. But at the same time, I felt that I wouldn't be losing money on them. And I'm just amazed, Mark, that you can put a number of amateurs together, have them pick 10 or a dozen stocks, have 4 of them return more than 100%, and have every one of them return a minimum of 25%. These are just folks that are amateurs. There's not a single investment professional in the group here, and yet these results are not atypical either from these panels, are they, Mark?
No, our panel in November is beating the market also. I just wanted to feature this one. This is just a long-winded way of saying you're all invited to the stock panel discussion on May 14th, where we will share a comparable number of ideas again and, again, put our best foot out there. There are no guarantees in this realm. We don't always see these type of numbers, but these are fun. And I just want to reach out and say thanks, Pat. Well, thanks everybody, but thanks, Pat.
Hey, well, thank you.
Happy St. Patrick's Day.
Yeah.
All right.
Here's a toast of green beer to all of us.
Yeah. Sanchez, they say.
All right. So let's go ahead. We have invited our honorary Irishman, Matt Spielman, to talk a little bit about what's going on in the aviation industry. So, Matt, go ahead and take us away, or up and away, I guess.
Sure, we'll begin the story as any good Irish story might start. So I've posted a little bit on this in the forums, and of course most people know probably I'll talk about Air Lease until you hang up on me or get up and leave. So I thought it would be it's certainly, given recent events, it's worth some time to spend on Air Lease's most worthy adversary, AerCap, who, for those who haven't read it, just announced an acquisition of GE Capital Aviation Services, or GCAS, which right now is the biggest portion of GE Capital that's left, and will be sort of the last remaining recognizable portion of GE Capital. And I call this getting the band back together for a couple reasons. So the origin of air leasing has a couple branches. The first branch begins with Mr. Tony Ryan, who's stage left there, shown later in life, who was an executive with Aer Lingus, who at the time was the national airline of the Republic of Ireland, and who, as any self-respecting transatlantic airline did at the time, bought themselves a 747-100 at the dawn of the jumbo jet age, which is below. And they found, given the limitations of flight routes at the time, they weren't able to fill it. And so literally out of necessity for this large asset they didn't want to become a white elephant, they charged Mr. Ryan with figuring out a way to make money with it. And he did what's called a wet lease, so not just leasing the plane, but also the crew and fuel to interested parties wherever they wanted to go. And that sort of begun not only his interest as he worked out processes for it, but also became the basis that Ireland has become one of the key bases where aircraft leasing companies reside, because they have very favorable tax and regulatory structures, because it used to be that the state-owned carrier was in that business. So that business was called Guinness Peak Aviation. That's the circular logo up top, above the band. And Guinness Peak Aviation was the world's largest lessor for quite some time. And Mr. Ryan was expanding it aggressively and ran into an unfortunate circumstance that they were just about to go public to fund some further expansion he had in mind at the outbreak of the first Gulf War. And in fact, it's in 1991. In fact, that went so badly that by 1992, the company not only didn't go public, it went under. And two parts of it were sold off. First to General Electric, which became GE CAS, and then the second one became AirCap. So the events announced last week, and that will take until the end of the year to come through, actually bring back Guinness Peak Aviation, although I don't think they're going to change the name back to it, and bring what will be the world's largest aircraft lessor. Now I have ILFC underneath. Those who know way back when I was first introducing Air Lease, ILFC is the company that Steve Hazy started right about the same time that that Guinness Peak was started, and was let's say a rival as the world's largest lessor. It so happens that ILFC was eventually sold to AIG, and in the last recession, the financial crisis, AIG, as it was releasing assets, sold ILFC to AirCap. So one of the things here is that AirCap has a very unique level of experience, not only with sort of the structures of these companies and how they work, but they've actually just finished, I'll say they're probably 2 years back, had finished sort of digesting ILFC and getting them in shape so the portfolio is how they want. So they have a playbook on how to do this, and had an opportunity because of this latest crisis to do it again. So of course the industry has just come out of its worst year since World War II. And again, if you've read my Air Lease commentary and read really any of the management, the quarterly earnings calls, aircraft lessors are really in a unique spot. Air Lease in January raised $750 million in debt at 0.7% interest, so paying like a money market account. AirCap actually raised $1.5 billion at 1.75%. So they're paying less than you pay on your mortgage for unsecured debt. But their customers, the airlines, are paying upwards of 10 and 11%, and that is secured. So there's a high divergence, a large spread in the financing that lessors are able to get versus airlines. And I think that's going to be an industry opportunity, which makes this interesting. So that's the background. Next slide. So these are slides out of AirCap's earnings release, and I do think I have most of these in the forum posting I did. But just to talk about the playbook. So what AirCap is going to become is a company with I'll say over 2,000, a little over 2,000 managed aircraft, owned and managed. 900 engines, if you recall, because GE was in this business. Why would GE get in the aircraft leasing business? Well, because one of their major product lines, and still will be, is selling aircraft engines. Engines are a large enough component of airplanes. Sometimes they're the majority of the purchase cost of an airplane. It depends on sort of the balance of things. Certainly a significant item, and GE has a legitimate interest to want to push them to go forward. And then also kind of a sideline in helicopters. And it'll be interesting to see with both the engine leasing and helicopter leasing. You'll see on the chart on the right-hand side, as Air Lease talks about what their portfolio is and what they're going to shape it to be, there's really no mention of engines or helicopters. They don't fit in there. So those may be sidelines that get spun off, but those are opportunities to grow too, because that is a unique area. There aren't a lot of direct competitors doing those things. But you also see, even combined with GE, it wasn't that GE was in bad shape. Their aircraft fleet age of just about 7 years and lease term of 7 years is about the same that they had. Let's see. I will say that GE did take a $3 billion book value hit when they bought this, so they wrote off that loss. It's a non-cash loss, but it'll hurt. That's about 10% of their business. It's a little bit more, but fairly close in line with what AirCap actually took off, as well as they write off with customers that may have gone bankrupt or gone through reorganization. They'll have some payments they don't get. All right, next slide. So the money, how are they doing this? And this was actually pretty surprising to me. So they're getting 111 million, 111.5 million AirCap shares, and given how AirCap has gone up and GE has gone down, those are paying off already for GE. But 24 billion in cash. So AirCap is raising a lot more debt in this. You can see Citi and Goldman are running the books for them. Now, this won't be one big slug. Gus Kelly, the CEO of AirCap, talked about this will be several different forms of debt, including different maturities, as well as perhaps convertible securities or something else. So they're going to lay out the debt to sort of be in the order they're going to pay it off, as opposed to one big mountain they have to climb at once. But that still is a large amount of cash to have two investment banks commit to bring this to fruition, again, at a time when their customers are mortgaging their frequent flyer business, which is one of the most profitable businesses airlines have to get in there. And that just shows the disparity again. The two other things, well, I mentioned the asset write-down. They are increasing their leverage. AirCap's target leverage is to have 2.7 times debt over equity, and certainly this business is a financing business, has a lot more debt to equity than you might typically see in a better investing zone, but it is very stable. They were down to 2.3 to 1, so they were below their target before, and this transaction will take them up to 3 to 1, but then they'll work it back down. That's I won't say exactly. That is very similar to what happened when they funded the ILFC buyout, and they worked their way back down to 2.3. So they have a playbook to handle that. And they do expect to maintain investment grade credit ratings through there. And again, that's a key part of that difference. Although I'll say they're a lower investment grade credit ratings, they'll be BBB or something like that, or BB plus. So that they're sort of the lowest investment grade rating, but again, much higher than their customers are. And that's a spread that they exploit to be able to make this magic happen. Next slide. So again, this is just an idea of their history. AirCap, very much in contrast to Air Lease, has been very acquisitive over the years. So they have, if you will, an expertise in how to look at acquisitions and then also how to execute them. They've been very successful to date executing all their acquisitions. Next slide. Okay, so what does this mean? And in fact, one of the questions Gus Kelly got when they did the announcement was what he thought the regulators would do, right? You're adding essentially the number one and number two lessors in the world. You know, how much business are they going to be forced to sell or give away or not bid on to work on? And Gus said he didn't think there'd be any issue. And of course, they've looked at it. They've probably talked informally, but I was a little surprised by it. So I have a little data behind this that I'll say I believe him now. So next slide. And I put these up together because they need to be compared, but to focus on the left side one first. So this is the fleets of the top 10 aircraft leasing companies by fleet, and this is where you get the greater than 2,000 airplane number. You can see GCAS number one, AirCap number two, going on. But really, if you're looking or thinking about the size of a lessor, it's kind of a "what have you done for me lately" situation. And that's the right-hand side. So if you think you have leverage with a manufacturer, Boeing or Airbus, or with a customer, they're really more interested in what is the new technology you're bringing in rather than what you have running now. And you can see in that case, although GE and AirCap certainly are big, they actually have individually less on order than Air Lease does over to the right. So it's significant, but when you think about the right-hand chart being sort of the forward book of business or how much business you're going to do, it's sort of much more reasonable. And although these are not, the time frames in the two charts aren't quite apples to apples, you can certainly predict that AirCap will shrink to a degree from where they are. So to put those in the numbers, the orders on the right-hand side are generally for the next 5 years or so. And all the companies will periodically announce new orders. Boeing has gotten a few big orders recently, both from airlines and from lessors, but they generally look out about 5 years. If you recall from the a couple charts ago, the current fleet has generally about 7 years left on they're 7 years old, have about 7 years for the two, have about 7 years of leasing term left on them, right? So they have 2,000 planes that will sort of finish off again on average in about 7 years. And they're going to order around 600 to replace them. So they will shrink the fleet, but they'll also really get rid of the older planes, and so the fleet they'll have will be much more profitable. But if you look at that forward book of business as being both the leverage they have to order from a Boeing or Airbus, plus what they have on offer for airlines to come in, I'll say it's more reasonable. They will certainly still be a formidable competitor, but they'll have a number of worthy competitors as well. Air Lease being one. Avalon is probably the next one. Avalon is privately owned. Thinking forward about what this means to the industry. A lot of people predict more industry consolidation. That would be very out of character for Air Lease, who's really bet the farm on the idea that they're only dealing with newer planes, and so picking up a fleet that includes, let's say, a lot of ages, whether it would be a deal like AerCap's deal or doing a sale and lease back, so buying an airline's existing fleet and coming back, has been something that they've put off, all the way up until this day, because that sort of spoils their whole business plan. But there are a number of other players. A number of them are Chinese owned at this point, but there are a number of other players that may see consolidation, and of course, it's helped everybody's stock price since the announcement came through. Okay, so more on the industry, just more background and switching back. One of the things I do love about Air Lease, not about the business itself, but about the quarterly earnings calls, they're very much as focused on educating about the industry and the state of the industry as they are about their company. So I've stolen a couple slides here. You can see the growth again, whether it's ILFC or whether it's Guinness Peat in 1970, just beginning. 2020 is 43%, and it depends on how many retirements might be announced, but leasing is on the cusp of becoming the majority of the fleet flying today. And so they were kind of at a point of whether it's normal or not. There are still significant holdouts. Delta Airlines, up until 2020, explicitly had a strategy of owning their planes. They didn't want anything to do with leasing, but their CEO has made comments that he's open to it now. So if anything, 2020 will accelerate the growth that has already been well established for leasing planes versus purchasing them. Next slide. And then again, this is on an industry basis. You can see, looking at those older aircraft, so aircraft, and again, plus or minus, generally have a useful life of 25 years. But of course, if you're going to order new or go on the market to look for something, you don't wait till the month before or a fire sale to find one. At 20 years old, you're looking how to retire and how to replace. So there are here over 3,000 planes that are at the end of their life. And you can see, you look at the jumbo jets that everyone's retiring. Boeing 747s are 77, A380s are 237. So 10% of them are sort of the super jumbos that everyone's getting rid of. But the rest are workhorses that have simply run through. And the very bottom comment there, of the 3,000 possibilities, looking at the acceleration of the year 2000, over 1,300 have already been announced. So it's already happening. It may not be happening today, or you might not notice it because they're grounded anyway, they're not flying. But there are already 1,300, already half of these are on their way out today and need some sort of replacement. With the OEMs having multi-year backlogs, the only way that's going to happen is by dealing with lessors.
So Matt, if I could just interject for just a second, that order that went to Boeing recently, do you happen to recall roughly how many aircraft were involved in that? It seemed like such a large
United order. Yeah, a lot of that was a pull ahead. But they did insert, I think it was close to 50 737 Maxes in 2022. The 737 Max is a particular special case. Of course, Boeing was in trouble with that program long before 2020, and so there have been a large number of cancellations and what becomes whitetails, so planes that are built but don't have a customer. And I think United will be absorbing a lot of that.
Yeah, the thing that strikes me is that seemed like such a large number, but next to this slide that you're showing us, it really isn't such a large number.
Yeah, it's just the first in line, and there's a long line behind it.
And probably has ramifications for any study of Boeing also as a company.
Yes.
All right.
Okay, so one bonus selection to finish out the story. I mentioned, we can go to the next slide. I mentioned Guinness Speed Aviation. Oop.
Well, I was just going to say that, just for posterity, I don't think they even serve peanuts on planes anymore.
Yeah, allergies. You have to make sure no one has an allergy.
Yep.
Yeah, you might get arrested.
Pretzels. So I mentioned Guinness Speed Aviation going off. Well, if you know aviation, you're familiar with Tony Ryan. Tony Ryan's second act is Ryanair, and I just threw up a beginning data sheet just to note for everyone. It is in the online tool. It is in the data set. It is listed in the U.S. as well as London. Ryanair, in a lot of minds, holds a place similar to Southwest, in certainly in the sense of the customers they serve. It's a short range carrier only. It is not intercontinental, and it is a low cost carrier. Probably in a lot of minds of European travelers, they might be more closer to Spirit in the sense that there's been a love-hate relationship over the decades. Ryanair's CEO Michael O'Leary has done things like propose stand-up seating, where you kind of straddle a bicycle seat for the hour and a half, including takeoff and landing. He's proposed taking out 2 of the 3 standard lavatories because he could put in 6 more seats. He's proposed, and it actually came close to, reportedly, having pay toilets on a plane. So he has a mindset that really looks to squeeze money out of flight services, but since 2017, they've really turned a corner and tried to be more family friendly, to realize that it's expensive for families to travel, that they do like to travel a lot. You have school holidays all the time, and that's an important market segment. So definitely the biggest carrier by passenger count in Europe, definitely focused very well to sort of have a priority seating or priority in line of the recovery, with an expectation that it will be domestic or interregional leisure travel that will recover before international travel, before business travel. They should sort of be the first ones to recover. And not Irish, but as a double bonus, is Wizz Air. Wizz Air is based out of Budapest, Hungary. They actually have been very aggressive, not just buying planes during the downturn, from distressed sellers, but also reserving slots in airports that used to be too expensive for them to go to. So both these airlines, very much like Southwest, very much like Spirit, go to secondary airports as a way to manage their ground costs. Wizz Air is actually, if you listen to any interviews of the CEO, has been very forward and very aggressive in expanding over this time, taking advantage of the pain that the legacy flag carriers have had. Unfortunately, Wizz Air does have an ADR on the pink sheets in the U.S. It is not in the data set, so if you're going to investigate them, you'll have to do that sort of on your own or manually. But if you like Ryanair, for some reason it's not quite there for you, you might dig into Wizz Air as well.
Okay, thanks, Matt. I will take a look and see if we can add them to coverage. I'm pretty sure they are at Y-Charts, so good. Well, just to give some perspective, a couple of things I wanted to point out. We have talked about this at other bull sessions, but Ken and I often talk about the chasm that happens with recessions or industry depressions. The airline industries, thanks to the pandemic, are certainly in the throes of a depression. What does a depression look like? Well, you can see the profitability is off the charts negative. That means there's a hole in your stock selection guides where there used to be earnings. This bothers most people. It doesn't seem to bother Kim or Hugh quite as much as it bothers Ken and I. But you really do have to adopt a long-term focus for thinking about a situation like this. One of the reasons I bring this up is Ryanair was featured not that long ago, and I'll try to find the link to share with the audience in the forum as a pretty promising strategic, as Matt said, kind of Southwest-like, only with a European slant. And maybe that's the way to look at them. And they are projected currently to come out the other side of this chasm in pretty good shape, pretty much on trend with that longer term perspective. So it can be quite an interesting study, and probably worth keeping an eye on, especially as the near future unfolds and we do come out of the global pandemic and some of the severe economic situations, quite severe in Europe itself. Any thoughts on that, Ken, or should we keep pressing on?
Well, yeah, the three dots mark past the chasm, whether they're earnings dots or sales dots. I'm thinking to myself, there's a large crack to run through in the reasoning. If you're going to recover as quickly as that suggests they might recover, why would you have your earnings stay flat then for the next 2 years? I don't know if the analysts have fully thought their way through this whole process at this point, and I don't know if they can, to be fair.
Yeah, and one of the precautionary things that we should point out is this company was selling for $44 a share within the last year, so the optimism is priced in on that recovery that you hear Ken speculating about. So it's just something to be aware of.
One other thing too, for anyone considering this, of course, I've also talked a lot about the impacts of Brexit, and one impact of Brexit in particular on Ryanair, but also on a number of other airlines, is they actually, in order to stay flying in Europe, so flights that both begin and end in the EU, they actually, and Leonard was just mentioning, just reminded me, Leonard, because it was on the London Stock Exchange. They're listed in London, they're listed in New York. They actually had a majority of their shareholders in the UK, which was exiting the EU. And the EU, like the US, has a maximum percentage of shareholders that can be foreign, what's now foreign in the EU. So they along with like, I don't know if EasyJet did, but certainly British Airways parent IAG did, put forward a shareholder resolution that essentially created two classes of shares. So if you do buy Ryanair because you are not an EU citizen, or if you are not an EU citizen, to leave it open, you would have non-voting shares. And they did that in order to continue, and particularly with their model, it's not hub and spoke, to fly within the EU, but it could be a shareholder rights issue for some potential owners.
Okay, thanks, Matt. All right, I just thought we'd take, in the spirit of St. Patrick's Day, just a quick look at a source of investment potential ideas specific to Ireland. And Hugh and I have done presentations on Ireland in other years. I'd kind of like to go back and take a look at how some of those worked out. But you can see that there's a number of companies on here that many of us have probably never heard of that may be worth a little bit more exploration. You can see that Ryanair does make the list. That ticker there, by the way, is probably a European exchange of some kind. I do not know. That is not their ticker symbol on domestic markets. But,
it appears twice on the list, Mark. Go on down further, and Ryanair's there again.
Yeah, that's the ADR there. That's
right.
Investable
right
down below. So just an interesting source of ideas. I know I've looked at Veolia, I think is how you pronounce that. We also covered CRH in some detail in the past. The one that kind of jumped off the screen at me was Flutter. I'd never heard of Flutter before. So I took a quick look at Flutter. But just some interesting ideas there that might be worth kicking around to see if any of those have interesting investable characteristics. One of the things about Ireland, the performance over the last few years kind of reflects that economic situation they've been in. Notice that their longer term returns are pretty good. it is a haven for some pretty formidable companies. I mean, there are divisions of American companies that are pretty solid in Ireland, as Matt Spielman personally experienced on behalf of one of those companies. So yeah, there's some interesting companies in Ireland. Here's a quick look at Flutter Entertainment, just some of the key characteristics that we pay attention to. The sales look kind of interesting. Stock price has been pretty strong here over the last year, especially since the pandemic bottomed back in March. You can see the earnings are not quite as strong, so the profitability is not quite as strong as shown in both the third chart down and the chart on the right. And Kim, I was surprised to find that this is a very prominent company in the gaming and sports betting world and entertainment, doing a lot of work with some American presences in that gaming and esports industry.
Well, it seems the guys at Round Hill Investments certainly know their gaming. That's all I can say.
Yep. So they're part of that whole bigger picture. All right. Here's a quick tribute to Hugh McManus and what we have dubbed the Irish Spring stock search or screening for companies. One of the things that Hugh likes to talk about a lot is to shop amongst a list of vetted companies that he is aware of or has respect for and confidence in, and to buy them when they approach their 52-week lows. So it's not exactly what he does, but it's related. Here's a quick look at a stock search result at Manifest Investing where we limited the criteria to companies that have quality greater than 80. So these would all be deemed excellent companies, top quintile companies, and that are within 20% of their 52-week low. So again, they're down in here somewhere, basically camping near their 52-week low. And when he finds that combination, he is nudged into a closer look and thinks about accumulating those that he already own and initiating positions in those that he finds very, very interesting. I was kind of surprised by the list, Ken. I mean, I did buy some Costco within the last couple of weeks as kind of a conservative, more vanilla selection, but pretty formidable company. And since I spend so much time there on behalf of my family, I figured might as well share in the benefits. I mean, my wife is on the Christmas card list from the Costco owners. Some interesting companies on the list, and I would just encourage everybody to take a closer look. Any thoughts, Ken?
No, I recognize obviously most of the companies, and kind of surprised to see one or two of them on a list of near their 52-week lows right now. So I own two of them. I own Regeneron, I own Biogen. So they haven't been bad to me in my portfolio. They haven't been outstanding performers, but they haven't hurt the portfolio at all to this point either. So
yeah, Baxter surprised me, and obviously I put the cereal box at the bottom in honor of Kellogg. That's a General Mills product, by the way, not Kellogg. But Regeneron is a roundtable selection that has been made a few times and done pretty well. And Northrop Grumman falls into that military industrial complex that Ken has featured in the last a few times over the last year. So yeah, they're there. And am I the only one that doesn't find that cereal box front almost ghastly? I mean, that's from a cereal box.
You mean scary?
Scary.
It's meant to attract children somehow.
Okay.
Yeah.
Well, it
I
apparently
don't know why.
works.
It looks like he's telling a scary campfire story.
There you go. Well, that would work. That would work. We often had Lucky Charms in our house as kids, so it must have worked. All right. And for those that would like to basically get a more complete rendition of the Hugh McManus philosophy for why he does this, two things. Go and read about it here. The other thing you can do, because if you've not ever done this, it will stun you. Go and look and make comparisons between the 52-week low and the 52-week high history for a number of companies. And when you begin noticing how big the difference is in one calendar year, and again, Hugh's premise is that much like that hedge of shamrocks at the bottom of the page, why not try to find a really great company that you trust when it's trading down near its bottom, because you just might be buying it at one of those low conditions after you realize how much higher those 52-week highs can be historically. And so it literally is a form of hedging that has served him well over the years, and his track record is hard to argue with. And as far as I know, Ken, he will be there on May 14th, right, for the COVID cancellation stock panel.
Well, yeah, as far as I know.
Okay. Well, as far as we know, his plane is still docked, and he's sitting there looking out his window, watching his plane parked and not flying. So, he doesn't own it personally. It's actually the plane for United Airlines or whatever it is he's flying these days. All right. Well, I was kind of hoping this was an Irish company, but I wanted to invite Pat to discuss kind of a bigger issue in general. This is Qiagen, a company that Pat mentioned on Manifest Investing this week, and it's a company that I have tracked for a while. I'm pretty sure that they're involved in sampling and testing and COVID testing and all that kind of stuff. So, Pat, you can enlighten us. But the question I want you to address is, with the pandemic, there's been an obvious uptick here in revenues, and they're obviously doing fairly well when it comes to earnings. Does it persist, or what do you see going forward after the 400 million doses of vaccine are distributed and testing becomes very commonplace? What do you see going forward for a company like this?
Okay, well, I think because of the type of company that it is, the backstory is that this is what's called a contract research organization, or CRO. And I had done what's called an industry study, was interested in the field in general because of the quickness of the COVID vaccinations that came out from Pfizer and Moderna. And, DNA gene treatments and things like that are, we may see a new standard of how medications are developed and how quickly they come to market. I think the precedent has been set personally. We'll see if it gets rewound at all. But those companies, can't do it all themselves. They have to depend on partners. And so I was looking for somebody in the middle, which has been a theme for a bunch of my picks over the last couple of years. The CROs basically are the third party. You are right, Mark. They can support testing. They can support research and development. They can support, the lab, the development. They can support sometimes the manufacturing of that. So I think a company like this that has a multi-pronged business approach should continue to do well and thrive in the environment moving forward, which is one of the reasons that I picked them.
Okay. Yeah, and I had looked at some of the same type of issues as I looked at Quidel. That's QDEL. Mm-hmm. And I believe they're actually more on the ground, more delivering the solutions to people's arms and buttocks and wherever else they end up engaging patients. But it's an interesting thing to think about. You're right. The playing field has changed with respect to pipeline development, and maybe that's a topic we should tackle with Mr. McManus in the future also.
I want to ask Pat a question, Mark. Pat, with these people, do their work at the direction of a partner? Is that the way it works?
Yes.
Okay, and would they do all types of work from research to manufacturing, or do they specialize in one area? Are they heavy with really smart people or people working in lab environments, or do they have a manufacturing component to them?
Well, so as a category of CRO, contract research organizations, they all have some different capabilities, right? Some of them try to set themselves apart a little bit. So some could have, more of an emphasis on manufacturing than some other parts of it. I'll be honest with you, at the moment, I'm not sure, without looking, if this company plays heavily in the manufacturing space. It's more in my mind, I'm thinking it's more of the research, the analysis, perhaps some initial development or manufacturing, just so that they could do sampling, things like that, and then take that out and run the blind tests and the analysis like that.
So they might also support the testing of whatever it is
Correct.
we're putting together, and run all the analysis on all the patients, the 5,000 or the 10,000 or the 30,000 that they've tested and everything. Okay, really interesting, really interesting.
So
And the other thing to the point that I think Mark mentioned, that, and you mentioned as well, they do operate, under the direction or under whatever contract that they're going to have with their partner. So the other thought I had about this is whether a drug is successful or not, these guys are still going to get paid, because they're still going to go through the process. And whether it comes out successful or not on the other side, they still have to, do all of the work. So, they're literally the engine in the middle of the process, is the way I think about it.
I like that a lot.
Mark, the company that you mentioned was QDEL. Is that the ticker of it?
Yeah, Kydel, QDEL. Yeah.
And you think that they're more into manufacturing things
And delivery. Yeah.
and delivery, things they've created, or doing this at the behest of a partner as well?
I think it's on behalf of others for the most part. I do not know for 100%.
Okay, be interesting to compare and contrast the two. Okay.
But
Yep, and you have to, we don't have to, but when you're researching these, I would look for the specific term contract research organization, or
Right.
CRO, because this space that they operate in is the same as laboratory corporation. It's the same as PRA Health Science, PPD, Icon. There's a whole bunch that everybody would recognize. And all of those, by the way, are peers. But then there's another 1,000 companies that are in the same space that do unrelated work.
It makes me want to go to Simulation Products, which is a company that I've owned. In fact, I still own, and find out if they are a contract research organization. That's something I never have looked for before. Okay.
yeah, I'd not put them in that same category. Of course, Hugh McManus does contract manufacturing, and
Right.
and basically startup type services for companies.
Well, the reason I'm mentioning Simulation Products, Mark, is that they do almost all of their work at the behest of a partner as well.
Exactly.
It's a partner stepping in and saying, we want you to simulate this particular process or this test or whatever it is, and we want you to do it this many times. Yeah.
Well, it's a worthy thing to think about. Thanks, Pat. I appreciate it. Years ago, I believe it was Quintiles Transnational or something along those lines, and there may actually be remnants of that even in what you're talking about, Pat, that served many investors within our community pretty well. So yeah, it's
Gotcha.
good stuff. Thank you, Pat.
You bet.
All right, just a quick reminder that we do archive the presentations on YouTube, so you can actually go to YouTube, just search on Manifest Investing, and here's the remnants of that conference from last November here. You can actually go and see what the stock panel talked about right here back in November, and you can actually scroll back to all the way back to May to hear what was said about those sensational picks made by virtually everybody involved. Even Ken's were pretty sensational too at 35% returns. We got to take advantage of Ken when we can. But
Yep.
just a reminder, go there and check it out. Subscribe if you like it, and you'll get notice anytime we post a session here for bull sessions or a roundtable. All the roundtables are there, or any other educational sessions or content that we put out. And with that, I'll just say thank you to Kim, Ken, and our special guests, Matt Spielman. A nod of or a tip of the green shamrock laden hat to you, sir. And Pat, I just got to say, I don't think I need to encourage you. Judging by your Facebook page, you have pretty reliably celebrated St. Patrick's Day over the last several years.
You are correct about that.
Okay, Mark, that's you step far enough over the line.
So
Step back.
I have no friends left now, right? I got everybody. I do have a trivial question for you guys. A trivia question for you guys. This is the Chicago River that's dyed green. In fact, this was the view from my office for a while back, many moons ago.
Orange.
But they dye the river green for St. Patrick's Day. Anybody want to take a guess at how many pounds of food coloring is added to the river to cause this to happen? It stays this way for a few days. Any guesses? How many pounds? Keeping in mind that a gallon would be about 8 pounds. So you put a gallon in. Any guesses?
You're obviously getting none, Mark. How many does it take?
You guys are stubborn. 40 pounds.
40 pounds.
I mean, you think about how little that is. That's like a half a
So like
bag
5 jugs?
Yeah, 5 jugs.
Whoever invented it was very effective.
Good stuff.
I think it was a plumber, didn't a plumber figure out how to make sure it stayed green?
Kim is absolutely right. And the plumbers are the ones that still do it. They actually take a couple of speedboats, and that's the blender or the mixer for doing this.
Wonder if the water even moves in that river. That's my next worry.
Looks kind of like a big Jello shot, doesn't it, Pat?
Yeah, exactly.
There you go. All
Getting
right. So with
thirsty.
that, we want to thank all of you and wish everybody out there a very happy St. Patrick's Day. And we'll just say until next Wednesday. Thanks, everybody.
Be safe. Thank you.
Thanks, folks.